problem with great expectations is that they sometimes get ahead of themselves. Just look what happened to longtime Cramer fave, I'm not backing away, Thor Industries, THO, the #1 maker of recreational vehicles and motorhomes under a slew of different brand names, the most notable being Airstream, but you got Jayco, you got a lot of them. For more than a year, this stock has been surging higher. It's doubled over the past 13 months as the company reported blowout quarter after blowout quarter after blowout quarter. But when you develop a reputation for shooting the lights out, you need to keep doing it or your stock will get crushed, which is exactly what happened today to Thor. Last night, the company posted some decent results, a 1-cent earnings beat off a $1.22 basis, higher than expected revenues, up nearly 63% year over year, a huge expansion of its backlog thanks to the company's recent acquisition of Jayco, one of its largest competitors. However, Thor also warned, or seemed to warn, we got to get to the bottom of this, that while it would have double-digit sales growth in 2017, it also expects the growth rate to slow later in the year. In short, it wasn't a great quarter, but it wasn't a terrible one either. Still, when investors expect a blowout and don't get one, they tend to be disappointed, which is why Thor's stock was slammed today, falling more than 11% or 9.8%, and the haters on Twitter came out and got me. So, should we start being concerned about the mighty Thor's future? Or should we look at this pullback as an opportunity to buy a high-quality stock with an excellent long-term track record? Let's take a closer look with Bob Martin, the president and CEO of Thor Industries. Find out more about the quarter, his company's prospects. Mr. Martin, welcome back to Mad Money.
Thank you so much, Jim. Glad to be here.
All right, Bob, I'm just going to go right to it. Page 48 of your handout. This is the sentence that caused this stock to go down 11. We also expect a strong contribution to sales and earnings from the inclusion of a full year's results from Jayco's operations. Given our increased production to meet demand in the seasonally slower first half of the fiscal year, we may see lower sequential and year-over-year growth rates in the second half of the year. Boom, down 10%. Right, wrong, what do we do?
Well, for us, we are being somewhat conservative. Still looking at an incredible year. And for us, definitely backlogs are large, but you get limited somewhat on production. And we have purchased new facilities last year, so we're ramping up production even more as this first quarter showed. And as we look into the second half of the year, we definitely expect it to be higher, but it's always very hard to predict how much because we are ramping up in other locations.
Well, was demand pulled forward? Is that ahead? I mean, if demand was pulled forward, we should now lower our expectations slightly for the typically busier second half. I mean, I have to admit, I read it and I said, I'm confused. I've got maybe 40 pages of positives, and I've got one line, and that one line trumped every positive.
Yeah, that's for me. We're still looking at a very strong year. Every dealer I've talked to, every retail show has been very positive in attendance and record sales where weather's not affected it. Tampa Super Show up 11,000 people in attendance. Every show that I've gone to has been up. So they've had very strong retail early in the year, but it's created large backlogs too. So it's telling us that our inventories are in line, if not lower than normal, and dealers are feeling very positive as they look at the rest of the year.
All right, well,
so if that one comment through people.
Right, I've been around, I haven't fallen off the turnip truck. I've been around. I know this line killed it. Okay, so we're not done. We're going to go over it again. Okay, should you have written that line differently? Because the next paragraph is what's the current status of your meeting demand? It's demand's good, demand's good, demand's good. But then we got to figure out what lower sequential and year-over-year growth rates mean if demand's good. They can't be in the same paragraph.
Well, I think part of it was because of tough comps as well.
Okay.
So the last two quarters have been we've really beat expectations quite a bit. As we get into the meat of our year, they're pretty tough comps because we really gear up production. This year, it should be up, but it's hard to really outpace production where we were last year at this point. Even with we're adding plants, you can't just flip the switch and turn it on. To a number that's unhealthy.
But there is demand everywhere for all of your models, as I understand it, from all the other pages in your presentation. You're not saying this is the top. You've seen cycles before. You go over and over again saying this is not what the end of a cycle looks like. And you even have a slide that says, has Thor reached its peak? And you answer, you say, no.
No. Right now, I mean, one of the things that I think have thrown people a bit too is the fact that our top line was up. Bottom line, not up as much as many had hoped. For us, it truly is. We talk about the effect of mix. And for me, you and I have talked about it before, we're building more entry-level travel trailers and entry-level motorhomes.
Right.
And for me, for the long term of the industry, that's actually a huge positive because those are younger buyers. And as I've gone to shows, dealers, customers have definitely confirmed we are getting a younger, more diverse demographic coming to this lifestyle just by reaching out in different ways through social media, being more aggressive at shows, having products that speak more to the younger buyer, more electronics, and very price competitive. But that is one thing that I think throws some people. But for me, I see that as a positive.
Well, but you did, Jayco margins are not what you want them to be. Can you take those margins up, which would therefore give you a good revenue and a good earnings per share story?
That is definitely one of our long-term goals. As we've said, that when they came in, there were some short-term opportunities, but there are long-term opportunities that we could help them. And quite frankly, Jayco is such a large company. As we've gotten into there, we've learned things from them that will help our other companies long-term. And there are just synergies that can definitely help both. And over time, that's once again, we're not really into the instant gratification, and it's hard to do, but we've been very clear that it will take a few years to do that. But yes, we definitely think that we can help them with their bottom line as well.
Higher gasoline prices cut back sales at all?
Not really. I mean, gas prices for us, dealers were used to selling RVs at $4 for gas, and they have their sales pitch around it. Customers would simply travel shorter distance. But for us, that really hasn't been an effect. I mean, right now, retail is robust. Right. But it is really on the entry-level travel trailer, the $15,000 travel trailer, smaller fifth wheels, and then this $65,000 motorhome, the RUV that we've branded, is doing just extraordinary.
Wow. Okay, well, I think, to me, it just sounds like you are being conservative. It is always jarring. I got to represent the viewers on a big down day. You understand. I can't just say, hey, sounds great. Right?
No, I totally understand. And it's for us, we try to look long-term, big picture. And we are a company that, we've been around a long time. We plan on growing. And for us, it's slow and steady growth is our main goal. And part of that, you have to manage that with quality as well. So it's hard to just really increase it up, even where you could. So we have our eye on a long-term growth, and we have confidence in the industry. We have confidence in our dealers and then our management team as well.
Fair enough. Thank you so much, Bob Martin, President and CEO of Thor Industries. Tough day for the stock. Go read over, make sure that you feel confident enough that the business hasn't peaked. I think there's a lot to say the business hasn't peaked, but I also know this is a company that is being very conservative. Mad Money's back in.